Prediction markets, by definition, cannot know the improbable things by which models have never existed in the past. Bitcoin mining revenue directly because it requires scale. So then you may end up buying a Bitcoin miner company out there who is in the business of doing this at an institutional scale.
Prediction markets allow individuals to bet on events that have not yet happened, from political elections to technological breakthroughs. In this arena, a great human trader, or what Jeff calls a fund manager of the future, can generate uncorrelated returns. These returns are independent of traditional market forces like the risk-free rate or the overall state of the economy. An exceptional predictions market trader can achieve an 8 to 12% return that is entirely a result of their unique, forward-looking insights. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Prediction markets is the antidote of AI, where basically, if you as a human have any insight that AI is going to be unable to front run, it'll be because you, the human, are living in the now versus whatever recursive learning that the AI was doing, which by definition is what predictions market is. You're trying to predict events that haven't happened yet. So if you're able to participate and bet on those markets, I guarantee you there are going to be some incredibly great predictions market traders, i.e. fund managers. They may raise money. They may raise money in a different format than a 3C7 hedge fund that we're comfortable with. It might be through a tokenized on-chain fund. And so these are the things where then I was in the radical portfolio, you should put 10% of your capital in somebody who can make great trades on predictions market, because that's an uncorrelated return of 8 to 12%, which has nothing to do with the risk-free rate, nothing. The rate of return on a great predictions market trader has nothing to do with the state of the economy. Right? That's truly a resistant radical asset that is productive and income generating. Prediction markets is really useful because the most asymmetric outcome that is going to happen there is if you bet on the wings. The things that people think are so improbable that they're priced at 10x payouts are usually the best markets to play. And this goes back to your foundational question on ideological investing. The reason the investing world today has worked in the way that 60/40 existed is because the world has been so stable around this unipolarity of American hegemony, for which the dollar plays a particular role, and the distribution outcomes is kind of like your standard bell curve. So you can build complex models on top of it because it's inherently predictable by definition. When you go into an ideological world, ideology by definition are fat tail events, right? Like if you are in the IQ of 30 or 150, that's kind of when you have an ideology, whether it's crazy or genius. If you're in the middle, that's not really that interesting. And so when you fatten the tails, what we're talking about here is allowing more improbable things to be outcomes you can bet on. And that's exactly what the world is. We are entering a period of a lot of uncertainty where we have to imagine the crazy things we never thought were possible might be possible. And that means it's a more volatile world. It means it's a less correlated world. But all of those things are inherently what is very valuable about prediction markets, because prediction markets by definition cannot know the improbable things by which models have never existed in the past. And so this to me is especially empowering for sovereign individuals, because that's when individuals can make their own decisions and what they want to believe in and bet on it. Stablecoin is really interesting to me because this is also another catch-all word where people seem to mean different things when they talk about stablecoin, kind of like tokenization. Like, are you talking about securitized token or tokenized securities? Stablecoins is, on one hand, a payment solution, but on the other hand is a yield-bearing asset management solution. And those two things are kind of different. On the payment side, which is kind of where the Genius Act is most currently addressing the market opportunity for, there's a lot of things to be excited about for kind of the capital efficiency of locked up capital that happens between merchants and the cost of transacting those. But from our perspective, in our seat, well, how do you make money off of that thing, right? It's like, do I buy a stock? Or like a dollar is not going to become more valuable by holding a stable coin. And what I've told people is, you know how you open your mailbox and you get like all the spam mails from like JP Morgan and Bank of America, and they're like, hey, like open a bank account with us and put in a $5,000 deposit, and in 3 months we'll give you $300. And if you really wanted to arbit, you could probably take the time, go visit the branch, open an account, get that 300, do it in another bank, whatever. It takes a lot of time. It's not worth your time, so you're not doing it. But that is essentially what I would call a customer acquisition strategy that stablecoins are now going to venture into. And when people talk about yield farming crypto and they talk about stable to stable yield farming opportunities, this is what it is. You basically are getting fees off of basically venture capital or other deep pocket investors trying to acquire customers to use your stablecoin, and you're just swapping them out. But instead of visiting like a physical branch, you just have to click a couple buttons online and hopefully also not get phished, by the way. So that's kind of the other risk. But that's essentially what stablecoin yield farming in itself is. And so I think
stablecoins, particularly those pegged to the US dollar like Tether, are playing a massive macro-level role. Jeff draws a fascinating parallel between Tether and the Eurodollar market that emerged post-World War II. Back then, offshore institutions created a parallel market for dollars, which the US government, rather than prohibiting, turned a blind eye to. They understood that this expanded the network effect of the US dollar, cementing its global hegemony.
There's a lot of opportunities for people to pay attention to like what is possible in this space in the construct of a stablecoin. But the big picture, like away from the money-making opportunity for us idiosyncratic investors is, how is stablecoin going to change the United States fiscal and monetary framework into the future? And for that, we do have a bit of a blueprint. The blueprint is Eurodollars. And back when the Eurodollar markets were founded post-World War II, if you study the history, it feels a lot like what Tether looks like today. It's offshore institutions that want dollars, and they want to provision dollars in Europe because people think it's more valuable than their local currency. And they're essentially creating dollars kind of out of thin air without the backing of the US Treasury. Back then, the US government noticed it was happening, but they also didn't prohibit it because they knew that having dollars in the hands of more offshore investors is ultimately a good thing for the network effect of exerting further hegemony. So they kind of turned like a blind eye to it, and which is why the Eurodollar markets even exists. And to me, this is an incredible blueprint of what Tether is doing right now and where Tether is going to go in promoting US stablecoin to offshore investors that allow us to exercise more control over that network effect. And so I don't know if you guys saw earlier today, but Bo Hines has now partnered as a CEO with Tether to launch a stablecoin with Tether's backing here in this country. 2 years ago, people thought that would have been unimaginable. But I think about these things in the context of how investing really requires you to think outside the box for this radical moment in time where these unlikely, improbable, fat tail events are happening all around us. And we have to be paying attention to it. And I think part of why we're all here is because we want to learn about it. The person you're sitting next to, left and right, are probably all thinking about these things. And that, I think, is the most important takeaway for what stablecoins are going to do in the future. It sounds simple, but it's going to be a huge market. Bitcoin Treasury Company is pretty simple at the core. It is an operating entity that is leveraging Bitcoin as the unit of account to bring value. I think at the core, that is what a Bitcoin Treasury Company is. There's many ways you can bring value to the Bitcoin ecosystem. But at the core, I think the idea of having your reserve asset being denominated in Bitcoin, where the goal is to acquire and earn more Bitcoin on a per share basis as organically as possible, is the mission. And it's the mandate for which people want exposure to actively and thoughtfully managed Bitcoin exposure, not just at the spot level, but in the ecosystem of opportunities that are possible in the technology behind it. So when I think about Bitcoin, there's the capital B Bitcoin, but there's also other subgraphs of Bitcoin adjacent stablecoins or zero knowledge roll-up opportunities in Bitcoin or Bitcoin mining. All of these things are kind of other operating revenue streams that are associated with Bitcoin that are truly purpose-built Bitcoin native financial institution can actually help navigate a lot of investors to access that historically they haven't been able to. For example, Bitcoin mining is actually the only currently known endogenous way to earn Bitcoin yield, realistically, from what that represents by doing the computational work. But most of us here can't actually access Bitcoin mining revenue directly because it requires scale. So then you may end up buying a Bitcoin miner company out there who is in the business of doing this at an institutional scale. But those companies also have operating level leverage and management discretion as to how they build out those businesses. But it's possible in the future we may have the ability to extract those opportunities more directly to the investor's base, right? That is a kind of a Bitcoin treasury operation that doesn't really mean asset management. It just means operating within the support of the Bitcoin network. So I think all of these things are incredible opportunities for what Bitcoin treasury companies can be doing, besides the proven path that we have seen Saylor expertly lay out through.
Finally, Jeff Park discusses Bitcoin treasury companies, a concept pioneered by Michael Saylor and MicroStrategy. At its core, a Bitcoin treasury company is an operating entity that uses Bitcoin as its primary unit of account and reserve asset. Their core mission is to acquire and earn more Bitcoin on a per-share basis. This goes beyond simply holding Bitcoin on a balance sheet as a hedge against inflation. A true Bitcoin treasury company is an actively managed vehicle that gives investors exposure to the entire Bitcoin ecosystem. This includes not only the spot price of Bitcoin, but also other revenue streams like Bitcoin mining, zero-knowledge rollups, and other Bitcoin-adjacent technologies.